Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes here on Share Talk for Monday, the 23rd of March, and sponsored by the UK Investor Show. Starting off with Biotrol, obviously lots of the pharma-related stocks, COVID-19 related stocks doing well at the moment. Gap higher for Biotrol this morning, and really while we're above that initial March 4.4 pence resistance. The initial target there as high as 7 pence at a 2019 resistance line projection, and possibly up to 8.25, which is the 2016 resistance line projection up there as well. On to Gfinity, which I suppose is the first genuine new situation to look at here. Clearly esports back in the frame as far as being very exciting in a coronavirus environment. We've broken this resistance line there from November at 0.9 pence, and while we're above that, or once we get an end of day close, end of week close above that, we could see some pretty strong movements, at least back up towards testing February resistance at 1.85, and possibly much more. There's a gap there up towards 3 pence from January on the shares. Island reversal there for the stock, so really early back below today's intraday low, around the 0.6 pence area, really questioning the recovery, which has been backed by very strong bullish divergence in the RSI window. You can see a much lower low there for March, but much higher RSI trace for the shares earlier this month. On to a stock which is intriguing as well, McCall's. Here we can see that we broke this falling wedge last week, tentatively breaking out of that at the moment, all the while above 19.20 pence. As long as we're above that, then there could be a flip to the upside, and at least testing support on the way down around the 30 pence area over the next week or two. Wouldn't be fair not to look at Novacyt today. We've had the stock rocket off the back of FDA news that showed us that this triangle that we had there from the end of January was a bullish triangle, just in case we didn't know. Interesting that just before the news over the weekend, there was a little flip for the stock back down to 105. 115 was the level that we didn't want to be broken, but intraday it was broken, clearly just to stop out the weak hands. Presumably that would only have been done on the basis that some bulls got a bit nervous ahead of the FDA move. Currently, we've got a situation where today's 150 support should remain in place ahead of a possible retest of the best levels that we've seen so far around the 222 pence level, and that could happen over the next 2 to 4 weeks or even less. New face for the Bulletin Board Heroes in the near term is Okyo. Here we've broken this wedge in place since November, gap through the 50-day moving average as well, so that does suggest that we could at least hit the 200-day line at 2.84 pence, and all of that valid while we hold above at 1.5 pence, which is essentially the bottom of today's gap. The time frame, the next 2 to 4 weeks on that. Open Orphan been a difficult one in terms of the bit of a log jam with a seller in the market, but it looks like finally we're breaking that line of resistance from March around 5.8 pence, and end of week close above that should give us 7 pence initially over the next couple of weeks, and then up to testing the best levels since the Venn Life Sciences move at 8 pence after that. Triple bottom and a gap filled this month as well should bode well for the shares over the near term. Going on to Synergen, which has really broken all the expectations that we might have had for it, really gapping up higher today and on Friday. The situation now is that we've got the top of a rising trend channel hit from December. Likely to see the shares come back to test resistance on the way up, which was 44 pence, but at least while above that, we could see a retest of 70 pence and perhaps even more over the near term. Going on to Tech Capital, which has finally broken out in a decent way above the 200-day moving average at 6.72 pence. gap to fill up to 11 pence, and that's where one would expect the stock to go over the next 2 to 4 weeks. Stop loss on the whole, bull idea at the moment, back below the 50-day moving average at 5.28 pence, although has to be admitted there has been quite a dance for the shares between 4 and 6 pence, so ideally we don't really go back below 6 pence over the near term. Finishing off with one of the movers of earlier this month, a massive spike for Tiziana towards £1.80. We need an end-of-day close for the shares above 48 pence today to perhaps give us the opportunity of a partial retest of the peaks of earlier in the month. Favoured destination would be 80 pence to £1 on any end-of-day or weekly close above the 200-day moving average. Only back now below the 50-day line at 39 pence. Questioning the recovery argument there at Tiziana. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.